Welcome to The Real Money Show, the number 18778 Silver, the website guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correia. And our question for today, will gold and silver explode in 2023? A little bit of a forecasting. And to forecast into the future, Jerry, we've got to look a little bit into the past. So let's do a little bit of a review of what we've seen in 2022. And then, of course, we can look forward into the future. First, what are your overall thoughts and takes on the precious metals in 2022?
Well, we are, I guess we can say we're approaching the very end of a rate hike cycle. The entire year was witnessing the Federal Reserve and all central banks globally embark on this mission of quelling inflation, so they've started to hike interest rates. So the entire year, and even last year, was just weathering the storm of interest rate hikes. Stocks were getting damaged. People's portfolios were being damaged. We don't understand. Trying to cut between the jawboning between dovishness and hawkishness, and as a result, precious metals over the last 2 years were pushed down because of interest rate hikes. Anytime a central bank raises its interest rates, it strengthens the currency. The perception of strength happens, so the currency started to go up, and the precious metals, as a result, on the U.S. dollar strength gets pushed down. We're seeing the bottoming of precious metals, and we're also seeing the peak of the U.S. dollar index. So this is a big turnaround that we're seeing at the tail end of 2022 as we embark into 2023. It's a great question to ask. What's going on with 2023 with precious metals? Will it explode higher, Jeremy? What are your thoughts?
Well, we'll get into it for sure a little later in the show. I think that 2021 was the year of transient inflation. The year the Fed refused to believe that inflation was anything other than being caused by excess buildup demand because of COVID, et cetera. 2022 to me was the year that they admitted there was inflation, even if they blamed it still on those things. And it couldn't have possibly been the amount of money and currency that they created out of thin air. So 2022 was the year that they admitted there was inflation and tried to do something about it. We read through the narrative in that, you would come to the table with shadow stats saying, look, inflation is not at 8%. If you look at the real inflation rates and you use proper statistics, it's closer to 15, which means raising interest rates to 5% while historically low isn't going to get you beating inflation. Nonetheless, 2022 was a year where central banks around the world raising interest rates in an attempt to fight the inflation did put the narrative out there and that the focus was on the dollar.
Right.
And it's something we don't normally see in the market, that a singular factor for gold and silver, but it definitely created a big headwind that the dollar did get strong. It was at the peak of its index. It was a major headwind for gold and silver on the price chart. But that belies what was happening beneath the price, beneath the surface in the market, right? We saw a lot of things happening in the market. The first was that right at the beginning of the year, moving into February, the Ukraine situation started to unravel, and all of a sudden, nickel imploded on the LME. And that signaled a top for the gold market. So it wasn't necessarily interest rates. There was something going on beneath the surface in the physical world. And then all of a sudden you had all of these massive drawdowns. Jared, can you speak a little bit more to what's been happening beneath the surface in 2022 before we get into 2023?
Behind the scenes, beneath the surface, there is a massive shift away from electronically traded funds. As we're seeing global gold ETF register their 7th consecutive month of net outflows in November. Investors are showing the need for physical. They're moving away from anything digital. Enterprise, countries, industries are moving away from futures and options on futures on the COMEX. We're seeing massive drawdowns at the COMEX month over month. Metals, physical precious metals, are being removed from these exchanges, and these are the very exchanges that provide us with the very spot price. And they're heading, where are they going? They're heading east, not to the coast here in Canada. No, they're going overseas into countries like India, Russia, China. Net imports. This is a strategic move. You mentioned Ukraine. There was a strategic move away from the SWIFT system, the digital SWIFT system. Russia was sanctioned by every nation. They were kicked off the SWIFT system. They couldn't pay bills. They couldn't transact and continue their business enterprise. So there was a shift away from the SWIFT system. They pegged their currency to gold. Now, fast forward today, they're pegging oil to gold. India is trading. There is a de-dollarization away from the US dollar, away from the SWIFT system. And observing this is a massive undertaking by not just investors anymore. This is countries moving away from the old system. And it's remarkable to see that how quickly this can happen, how quickly things can unravel for the central banks and for these exchanges that have been peddling paper instruments and digital instruments for way too long. And, the outflows, it's a very big signal to everyone. So, what does this matter? Why does this matter, Jeremy?
Well, the number 18778 silver, the website guildhallwealth.com. It matters because what you see is we've been talking about today. On the one hand, you have central banks, Western central banks trying to fight the inflation, but we have the Russian narrative going on with sanctions, and all of a sudden you see the BRIC nations all throughout 2022 saying, okay, we cannot deal with US dollar hegemony anymore. We're going to make our own way. And that was forced onto Russia, by the way. Mm-hmm. And it's as if Russia knew that this move was coming and was prepared on the chessboard to say, okay, well, we're going to do this. It's kind of an action-reaction thing, but they knew what was coming. And so it seems to me, and anyone who's following our Telegram channel or our Twitter channel can see every week it's like another country has joined the BRICS. Every week there seems to be another article out there of some country that is acquiring gold. There was the Ghana story a couple weeks ago, right, that they want to trade, that they're willing to use gold. And when you're willing to use gold, that becomes the currency. Mm-hmm. That becomes the global currency. So these are major undercurrents in the market. So just to wrap up on the segment, you have, okay, we're going to try to raise interest rates in the West. We're going to try to bring value to our dollar. We want to keep the price of gold tamped down, the price of silver tamped down. Meanwhile, the physical gold and silver is just racing out of the warehouses, moving east, and all of these countries around the world are looking for, give us a reason, any reason to get rid of the dollar. And by the way, we want to back it with gold. Mm-hmm. So, and the Fed so far has not beat inflation with interest rates at 5%. So I think what this lays out for where the prices are headed in precious metals is, if you just look at from a strictly supply-demand fundamental, mm-hmm, it's going to go much higher from here simply because the demand is there. Right. And the trust factor in the systems, you've got, will you trust our system if we just raise interest rates? Or on the other side, will you trust our system if we back it with gold?
Right. 100%. When you have zero trust in the system, when you have zero trust in the methodology of pricing inflation and pricing even physical gold and silver prices, when you have premiums, that's an indication that there is a flawed pricing mechanism. And 2023 will be the year where we're going to have a force between true price discovery and the continuation of COMEX prices. Because when you have a shift away from when you have a shift away with metals moving out of the COMEX, the very entity that provides us with this fictitious spot price, we have a true price discovery at our doorsteps. And this is the reason why I'm arguing. I mean, over the past few decades, we've seen silver prices. I'm going to talk about silver for a second here. we've seen silver prices peak every 3.5 years. The last peak that we saw was 2020. So 2023 is going to be a very exciting year, a very explosive year, especially now coupling in with Fed failures, insolvencies. We'll get into that later on. But then true price discovery is going to happen.
Yeah, one thing you just kind of mentioned there, which I think we need to highlight, is that there is no longer a motivation for people to have paper. That one of the big things we saw through 2022, and that comes from central banks as well, and you see it in the drawdown off of the COMEX inventories, is if I can't hold it, I don't own it. Mm-hmm. It's not good enough to have in the ETF. It's not good enough to have a futures contract that I may or may not be able to take delivery of. If I can't hold it, I don't own it. And that seems to be a massive trend globally, and I think that is going to bear fruit in 2023 as well. The number 18778 silver, the website guildhallwealth.com. If you missed a show, you can go onto YouTube and catch us there, and we're also on Spotify as well. Before we get into more of our forecasting for 2023, we were in the last segment looking back a little bit on the last couple of years just to get a little bit of a context of where we are today. And Jerry, I thought I'd bring this article by Dave Kranzler, who's a great analyst in the market. He wrote this commentary for Kinesis Money, and kind of talks about what we were just saying before, technicals, but also what's happening behind the scenes. So I thought I'd let you know what Dave Kranzler was talking about, and then I'd love to get your comments. He says, from a technical standpoint, an investor who likes to use charts as part of a toolkit for investing and trading would be hard-pressed to find a more bullish chart setup than the charts for gold, silver, and mining stocks. Certainly, the technical picture for precious metals sector is more than supported by several fundamental factors. It's been well documented that the banks have been reducing their net short exposure to gold and silver futures contracts on the COMEX. This move has been mirrored by the Bank of International Settlements, the central banks of central banks, which has nearly eliminated its gold swap transactions. Bank of International Settlement gold swaps, after the swaps outstanding reached an all-time high back in February. The Bank of International Settlement gold swaps are a gimmick used by the Bank of International Settlements to make available Bank of International Settlement gold bars that can be used to allocate bars to larger buyers who choose to leave their bars in the custodial safekeeping of London bullion banks. The problem for the Bank of International Settlements, he goes on, is if the legitimate owners of those bars decide to take possession of the bars and remove them from the London bank custodial services. The only reason I can think that the Bank of International Settlement would largely eliminate its exposure to upside price risk in gold and silver is concern about the probability of a big move higher in the sector that might trigger a run on the bars and London gold bullion vaults, including the swap BIS vault bars. This action by the Bank of International Settlement thus removes the risk of its exposure to unallocated gold bars in London bullion bank custodial vaults, which implies that it may be worried about either a big move higher in gold or a run on the physical bars in the custody of London bullion banks, or both.
Both.
That is wild. Mm-hmm. So the Bank of International Settlements is saying, we don't want to swap anymore. If the market goes up, we could be screwed. B, if everyone starts to take delivery of their product, which has been the trend, we're going to be screwed too. So we don't want to do these gold swaps anymore. What are your thoughts?
Yeah, they're definitely, what they're doing is distancing themselves away from these risks. And these are massive risks of default. And by addressing the issue of physical deliveries and not being able to cover, this is an exposure of the derivatives market. And when you highlight things like ETFs, which is a massive derivatives market, we hone in on the number of ETFs. And this is now, we're honing in on the everyday investor here. The investors today are, investing in ETFs. They're being offered certificates, and they're being offered unallocated gold. But the ratio between these instruments to physical gold, which is supposed to be the underlier of these instruments, is a whopping 200 to sometimes 400 to 1. So the investor needs to follow this and shadow what the Bank of International Settlements are doing, the central banks are doing. They're hoarding the physical bullion.
Now, as well, since we've been seeing this drawdown, every time an ounce of gold has left the COMEX, then all of the paper against that gold has to disappear. So if you have 300 contracts or 300 people sharing that 1 bar, and 1 bar leaves, you have to get rid of all of that owing, don't you?
You certainly do.
So the paper's coming down. So the market is getting more pure all the time, coming down to a fundamental level of what actually matters, which is the physical. You mentioned risks, Jerry, and I think that any everyday investor is looking out and maybe a little confused that, are there risks? Should I be concerned? When you look at from a standpoint, we'll get into this. I've got some articles to show a little later about the everyday Canadian, what the interest rates have done to the housing market, to family debt, to personal debt. I mean, it's exploded. But if people are worried about risk, how do you handle that in today's market? Do you just sit back and say, the Fed's got it covered? Interest rates are going up. That's good for the system. Or do you get a sense that people are still worried about risk, and what can they do to take care of that?
Yeah, we're in a position where the central banks right now are speaking out of both sides of their mouth. They're very hawkish and they're dovish this week, the central banks. This week was a massive week of central bank moves. A lot of central banks raise interest rates, from the US Fed to the Swiss National Bank, the European Central Bank, all raising, trying to quell this inflation in the inflationary battle. The inflation data came out this week, which showed that we could have potentially, which is a total farce, potentially peaked at inflation. But when we look in the numbers, Jeremy, of inflation, everything went up. Food, electricity, new vehicles, clothes, medical care, shelter, transportation. The only thing that went down, the only two things that went down, were used cars as well as oil. And we all know that now, we spoke about this in the last few segments or last few episodes, that it was the draining of the U.S. strategic petroleum reserves.
Yeah, and I think as far as used cars, I've been hearing that there's now a glut of chips.
All right.
So I guess the new cars are all coming in. I don't know for sure, but I would assume that new cars would be coming. If
so.
All of a sudden you go from a chip shortage to a glut of chips, then that would explain the second-hand car.
I am noticing a lot of dealerships, they're starting to get cars in the lot these days. So we could probably see some imports coming in. But this is a narrative that they're trying to spin on us, and the investor sees the risk. Their costs have gone up. This is, the Christmas season. We're so squeezed right now, and anybody who's purchased a home in the last couple of years, some of them have been forced to sell, Jeremy. This is absolutely ridiculous, and Canadian investors are doing something about it. The amount of people that called it. I mean, this is normally a quiet time of the year, but we have Canadians all across Canada calling in, looking to protect away from high inflation and the risk of stagflation, which is very low growth, high inflation. And this is what precious metals does. This is what they have done historically, and investors need to protect from the risk of stagflation. And gold and silver is that solution.
And how is it that gold and silver protect against inflation or against these risks that are out there?
But you can't print it. You can't print gold and silver. If we look at even the costs, the gold mining costs have rose as well. Inflation hits every industry. It doesn't matter if you're in mining, it'll hit you. If you're in any industry, the costs of maintaining your business and remaining profitable get squeezed with rapid inflation. And this is a temporary. This peak inflation narrative is temporary. If you're the Bank of Canada said they're scaling back. They're seeing a winding down of interest rate. We're coming to the end of an interest rate hike cycle, and it's becoming lower and lower. That means they're not concerned, or they're not really concerned about inflation that much. They're really concerned about the central bank losses that we're now seeing. The bottom line of the central banks, the Bank of Canada, lost in the third quarter, first time. It's very historic, $500 million. The U.S. Fed is down trillions, probably even more in the next few weeks. Insolvency is on their doorstep.
So there's a lot of uncertainty and a lot of financial risk in the system, and they're doing their absolute best with this monetary experiment that started. You could say 2008, 2009 with quantitative easing, and perhaps it goes all the way back to 1971 when they lifted the gold standard. But nonetheless, here we are in this monetary experiment, and we've already seen some disastrous results in terms of the inflation that we're seeing, which is a direct result of creating currency out of thin air. There's no doubt about it. It doesn't matter what those mechanisms are. That's the bottom line. And so how do we lower that risk? Well, gold and silver are not investments. They're money, and there's a finite amount of them, and they've always been money. And they've always been a place where people hedge themselves against these type of financial risks. Because when you own physical gold and you own physical silver, there's no counterparty risk. If I have cash in the bank, the counterparty risk is the bank. And I don't know how they're doing. Now, here's another thing to just kind of think about for a second. You have all these wizards out there, financial wizards, who got caught with FTX. They're out there, they're testifying to Congress, whatever, and they're saying this, that, and the other, but they didn't know. They didn't know what the inner workings were. They didn't know what was inside the sausage. Can any listener right now say that they have a perfectly clear understanding of the inner workings of the financial system and they don't see a risk? You've got to be considering a hedge. And what's beautiful about gold and silver is they're outside the banking system. There's no counterparty risk. And because there's a finite in amount, the potential on the supply-demand side to push the market massively higher is also there, right? You don't want your insurance policy to pay out, but if something does happen, you want it to pay out big. And that's where the precious metals come into play. The number 1-877-8-SILVER, the website guildhallwealth.com. Jerry, what are some of the ways that people could get involved in the market, let's say with a small budget and let's say with a larger budget?
Guildhallpreciousmetals.com. Look online, see what we have in stock. Everything that we show on the website is in stock. If you're looking at the market for the first time, you want to maybe consider some currency. You want to consider something like Canadian maple leaf silver coins, gold coins, great to have in your possession. They have a face value, very strategic to have in your possession. A lot of investors are worried about, when the lights go out or when things hit the fan, you want to have tradability. Yes, this is a time where we have to look at the currencies, and if we have a failing currency, you have to have a hedge. So get some coins in your possession, and then once you satisfy that, then you move up into bigger bars as a store of value. Precious metals is that store of value. They're time tested. These are assets that have stood the test of time, and you're now looking at bigger bars. If it's silver, kilo bars are great. 10-ounce silver bars and even 100-ounce bars we have in stock. PAMP, Royal Canadian Mint, 99.9. These are new bars, uncirculated, and this is what Guildhall brings to the table, all LBMA approved, either for your possession, take direct delivery, vault accounts, or even in your registered plan, like an RSP or a Lira. A lot of Canadians have left the company that they're with. They have a Lira now, a former pension. You can roll that into a precious metals Lira right away.
And remember, with the physical precious metals registered account vehicles, the product is acquired by you, the owner of the metal. It is going to be stored outside the banking system in an IROC approved vault facility, fully insured, fully secured, serial numbers listed, sub account, itemized inventory report provided, essentially a warehouse receipt that you own physical precious metals in your registered account, but held outside the banking system. I still get jazzed about it. I think it's the best vehicle out there, especially if you're going to own physical gold and silver. I mean, why would you buy paper if you can own physical gold and silver? And by the way, it costs about the exact same as buying it over the counter. So there's really no excuse not to own some physical metal in your portfolio. The number 18778-SILVER, the website guildhallwealth.com. Jerry, we're talking about ways to get into the market, and we like to educate people on the reasons to have physical gold and silver and the benefits of having gold and silver in a portfolio, mostly because it is money. And once you have money that, by the way, gold's up something like 370% over the last 20 years in Canadian dollars. So it's definitely done its job against inflation or the devaluing Canadian dollar. And it is, even on the year, I think the only currency it's down in is US dollars, less than 2% down on the year. So we've really weathered that storm. I think it can't be underscored enough that the precious metals have done quite well, even though there's been headwinds all year of these raising interest rates. Mm-hmm. And silver's positive on the year in pretty much every single currency, I believe. And so that's also very good. And we will get into some forecasting. But as I said, we like to educate people. One of the best ways to educate people as well is to have it in your hand. Mm-hmm. It makes it a great gift. If you're gifting gold and silver to people, you're letting them have skin in the game. You're going to perk their ears up to, well, what is this market all about? I'm going to track it a little bit and maybe get involved a little more, because once you have that in your hand, it's stored energy.
That's right.
There is an aha moment that happens every time we have a client in the office and we say, here, hold it.
Yeah.
First, we do the 100-ounce bar because it's super heavy, and they go, "Whoa, whoa! I didn't think that was." And watch the desk.
Oh yeah, that's
watch the
money.
desk. Please
Watch
don't
your
ruin the
toes.
desk. Watch your toes. But no, listen. It's a solid 6.5 pound piece of metal. But then holding a gold maple in your hand and feeling the warmth of that gold, there's an energy to it, and I think it's so important. It's such a great educational gift for people, especially at a time like this, during. I'm going to call it a recession. I think we're in one, if not headed for one. Money's definitely tighter. I think you want to give something that is going to last long, that is going to prove the test of time, as you said before. Yeah. What are your thoughts? Gold and silver as gifts.
100%. You will really experience, and when investors, when people get that physical gold in their hands, there's nothing like it. You really get that sense of intrinsic value, especially when you do that silver test of putting the ice cube on the silver bar, when you see it just evaporate, when you see that ice cube melt. It's just an amazing experience. And the gift giving of physical gold and silver to your loved ones, it's a timeless thing, and it really births this question of what money is and what value is. And this is the very thing that has lasted thousands of years. And this is a time of season where, we're looking at gifts, and, we're last minute shopping for some, and we're looking at, what can I possibly give to a loved one? And gold and silver are those timeless gifts. They've definitely held a unique place of value and symbolism across all cultures, times, languages. There were no barriers for gold and silver. So this giving of, you want to demonstrate love and affection, admiration and appreciation. There's nothing like gold and silver. In Time magazine, back in 2015, they identified 3 essential elements for successful holiday gift giving. You don't want a losing gift.
I just want to say, is this the same Time magazine that put
oh goodness,
Bernanke on the cover of Man of the Year or whatever,
or even Hitler?
Did they?
Yeah, I think so.
Oh, okay.
Well, according to this article back in 15, the elements of a perfect gift as opposed to a great gift are generosity, insight, emotional impact. Gold responds resoundingly on all 3 counts. For example, for generosity, true gold, as in bullion, coins, and or bars, is a serious investment. Its precious quality and finite supply convey upon its significant value. It is indeed a plain metaphor for the best thing the physical world has to offer. Also, as always has been, the gift it has an undeniable wow factor. It's very true. The gold and silver that we offer are brand new. These are, pristine in quality. And, if you look at the mine, the new gold coin, the direct mine from the Nunavut mine, it's a remarkable gold coin.
Yeah, we have a gold coin. It's called Mine to Mint. It's direct from a mine in Nunavut, and they created a whole series of 1 ounce gold maples with it. Comes in a capsule within a card. Mm-hmm. So it's a nice, that would make a beautiful gift. I mean, that's a very expensive gift, but hey, some loved ones are definitely worth it. And, I like to give gold to my son, and I love to see it build. And, we had a client once who did treasure boxes for people.
Yeah, that's
right. And he filled the treasure boxes with silver maples and some other small gems, I think some rubies and things like that, and gave them away. I'm sure they went off amazing. But this is the idea: build your treasure chest.
That's right.
Right? What's going to hedge risk? What's going to make you feel safe? It's having your own, not literal treasure chest, but having those assets. Mm-hmm. They've been around forever. Mm-hmm. They're still diving into the ocean for them, and they're still finding them. No one cares about the paper from 100 years ago. Absolutely, no one cares about. I had someone hand me a whole pile, Jerry, of $1 bills, and it was like, what am I supposed to do with this?
Mm-hmm. And what happens when they eliminate the bills? Like, look at in India, they eliminate the rupee notes. I had old pounds. They could just cancel them. And you don't want to give a gift that can get canceled, Jeremy. This is an era of cancellation.
No, we want to be uncancelable.
We want to be uncanceled, and you cannot cancel gold and silver for your treasure chest.
And of course, you could also do a natural fancy color diamond. Again, that would be for someone very, very special, but they are definitely gifts that stand the test of time. Just looking at the rarity of some of these diamonds as well, where, the most popular cut of a vivid yellow, radiant and cushion, you're looking at less than 50 a year internally flawless vivids coming out. Less than 50. I think in some cases less than 25.
Goodness.
And on a oval cut, you're probably looking at less than 15 a year coming to market.
So rare. Beautiful and timeless. So going back to this article, the second one would be insight. Gold speaks to the importance of wealth and of saving and thinking about the future. You're gauging someone into generational wealth like a diamond or gold. As an example, the gift of bullion is a statement of hope and confidence to the parents of a newborn. Cash says shoes and diapers. Gold says first a car and college. So you're looking at planning here. Get your mind away from the quick flip and the chasing. No, we're going to plan now for your future. You are important. And thirdly, the emotional impact expressed in the element of surprise. It is highly unlikely that anybody but a committed numismatist or collector in precious metals will be unwrapping a gold coin. And no one can safely predict that nobody else will have thought to say happy birthday with a gold wafer. So this is timeless. This is emotional impact, insightful, and a generous impact that gold and silver can birth into someone who has never bought or have never held gold and silver before, Jeremy.
I would say look at a tube of silver maples, because you could split them up and distribute at will. I love the grams, 5-gram bars, 10-gram bars of gold. Those are incredible gifts. Last minute gift, right? Someone's getting married, someone had a baby. You grab that 5-gram gold bar, bang, you've got your gift, and it's a great, great gift. And the best part is no one's going to sell it right away, right? It's something they hold on to and they think about. And then eventually it's like, if you really want to sell it, you got to think about it and say, okay, and go through those steps. And that's an important process as well, because it's not just as easy as, just getting rid of it and spending it on diapers, as you said. Before we get into our forecasting for gold and silver in 2023 and wondering, hey, is this going to be the year that they explode? Let's look a little bit more of some things that have been happening beneath the surface in the markets. We've talked about what was happening in the gold and silver market beneath the surface, while the price seemed to go essentially sideways for a year with the headwinds of interest rates, etc. But Jerry, we kind of, it takes a while for these interest rates to work their way through the system, and they've done it at a rapid clip. And I logged on to Better Dwelling. It's been a while since I checked in on that site, and I just want to read you some of these headlines, because I think it's fascinating to see what it's saying about what's happening beneath the surface. First, something that's starting to show up maybe above the surface, which is this headline that says Canadian real estate prices are down 142,000 as demand drops faster than supply. Interesting how that happened, that the demand dropped all of a sudden. Remember, we had a housing crisis? Well, apparently we don't have so much of a housing crisis anymore. Not to be sarcastic. Look, the market was very, very high. Here's another headline. Canadian mortgage payments are consuming a record share of income. That goes to the idea of being a debt slave, to me. We've talked about this. You pay how much of income tax? Then 13% on everything after that. And then inflation is probably at 15%, means you're already paying out a majority of your income out to taxes. And then if you want to be in real estate, guess what? You've got to spend more than a quarter of your income in that. So what are we working for? Just to own a property in the city? Right. I mean, that's not living in my estimation. So that disturbs me. That upsets me. Here's another headline. Canadian household net worth falls $331 billion, first annual loss since 2009. Wow. And when I think of that, I actually think of Chrystia Freeland. Remember when COVID was sort of ending and she came out and was talking about, well, we've got access to people's savings accounts. That's where the money's going to come from. It's going to come from people's savings. Well, did she know that they were going to start raising interest rates and start sucking people dry with inflation because of that? Inflation and taxes and, all of these things. Last line, Canadian household debt is rising much faster than income and approaches a new record. So I think that we're seeing the effects of interest rates on the market, and these headlines in succession to me say there's not much more this market's going to take. And how are people going to get out in front of this, and how are people going to deal with this type of stuff? Right. And obviously this is creating risks in the market. And we're here to help people to avoid those risks and potentially profit from those risks as well. Yes.
The main idea here would be to not, we're experiencing this squeeze on every level, but it's causing the psychology to, freeze. Well, with the amount of risks that there are, and you mentioned that the risks are just rising, the costs are rising. This is not going to stop. The central banks, they're trying to lull us to sleep. They're doing, they're saying one thing and they're doing the next. And us as investors, we have to see through what they're doing here, because they're accelerating their plan. And the plan is ultimately to destroy the currency. Our currencies are being destroyed. And one way to do that is to not participate and to roll out of and convert out of the very currency that's being destroyed. Look at every single major currency versus gold and silver are down. It's the currencies, it's the central banks, and the idea of central bankism is not for the people. The ninth tenet of Karl Marx's Communist Manifesto is to create a central bank. So the idea of freedom, this is what we want. We want freedom to make a choice and protect our wealth, whatever you have built up. You don't have to have 6 figures or 7 figures. You could have 5. You could have a small portfolio. It doesn't matter. The idea would be to roll out and convert out of fiat currencies and into something tangible like physical precious metals. The precious word connotates that it's monetary. And when you have an issue of currency and monetary problems, you're now rolling out of the old system or the failing system and back into the trusted old system of gold and silver.
The number 18778-SILVER, the website guildhallwealth.com. Get out of the system. Protect yourself. Insulate yourself. Be your own central bank. Have physical gold and silver. They have no counterparty risk. Now let's talk about where they can go. It's one thing to avoid the risks. It's another thing to potentially profit from them as well. So we know that gold and silver are finite. We know that they've held up very well in the face of rising interest rates, which is incredible to me because it says that we didn't, they say, oh, we lost the battle, but we're going to win the war. I don't even feel like we really lost a battle here if gold and silver are so far, and the year's not over, even on the year and up in many currencies. I mean, gold's up like 15-16% in Japanese yen. It's up 7% or something close to that in British pounds. Right. So we're seeing a lot of movement in the market. We've got to talk very quickly about where we see the market going. We'll do it again in the next episode as well. But I'll very quickly, Jerry, can silver get above $30 next year? Just from a conservative standpoint, can it break above $30? Mm-hmm.
Well, that's where we saw silver prices go in 2020. 2023 will be a good year. I mentioned every 3.5 years we do have a peak in precious metals, and when you have a blow off of the derivatives market, and we just need a small percentage of the stocks and bonds to roll into physical precious metals, especially with physical dwindling markets or dwindling supplies of precious metals. This can force the market very easily over $30. The forecasts are, some are looking at triple-digit silver. I am in that camp, and I do feel that we are going to be exploding a lot higher.
Well, I'd like to see us get above $30. I think that a Fed pivot, I think that a market interruption, anything can push this market higher, especially since they're starting to roll out the talk of slowing down on interest rate hikes. Gold, we've got to get above $2,000 an ounce. I see that happening. I think gold can easily get above 2,000, and then we're going to be at that point. I think silver getting above 30 and gold getting above 2,000 signals that we are in a bull market. That this year we were in a stealth bull market. I think we hit those marks in gold and silver anytime in 2023. Bang, you are in a new gold and silver bull market. The number 18778 silver, the website guildhallwealth.com. Thank you to everyone joining us this week. I know you're very busy shopping. Hopefully you've been in the car and you've been stuck in traffic and parking and saying, hey, you know what? These guys make sense. Give us a call. Thank you so much for listening. It's been The Real Money Show on AM 640.